So, President Reagan, who sympathized with laissez-faire policies, commissioned a group to audit the government's payment plan, or payment system rather, and he wanted to know how our tax dollars were spent. We were paying all this income tax, and he wanted to know just what was going to roads and to schools and things of that nature. What they actually found out is that not a single cent of that went to any services that the government provides. Every last penny went to paying for the interest on the debt to the Federal Reserve primarily. So, despite the fact that Reagan is viewed as this fiscal conservative and things of that nature, it wasn't actually until the Clinton years that we saw a budget surplus. And despite popular belief, it did not last 5 years. If we do not count the Social Security funds into that, because Social Security at its creation was only supposed to go to pay for Social Security, but they throw it into the annual budget. The Clinton administration actually only had 1 year of surplus, and it was very small, but still, it was a surplus. Obviously, that did not last. So, Bush is sworn in, and pretty much immediately we've got tax cuts without any spending cuts. So in order to pay for those tax cuts without cutting your budget, you're going to have to then get money from something. So they borrowed more money. You had 2 costly wars, a new Medicare plan, a stimulus package, and bailouts, and the Bush administration created large deficits and increased the debt. Now he's supposed to be conservative. Barack Obama maintains the same policies of Bush, but adds further bailouts, another stimulus package, and a larger defense budget. And with that, he's created the largest deficits on record, which is $1.4 trillion. I didn't write that on the board. It's a little over $1.4 trillion. And that has increased the national debt to that number right there. So, given these loose spending policies, given Ben Bernanke, who's been pushing the interest rates really far down, which that just means we're increasing the money supply, these bubbles have been formed. The housing was the big one that everyone's been talking about lately. And because of that, the currency has inflated. So any of the bubbles that have been patched or been popped or torn or anything like that, they've been patched up and reinflated. And so right now there's this false sense of security and of recovery, and it's not happening at all. Because of all of the spending that's been taking place pretty much since the creation of this central bank, we've seen the dollar destabilize. Because of that, prices are going up, unemployment is going up, spending is going up, and inevitably taxes are going to do the same. But your quality of life is going down, and your buying power is going down. And as of 2 p.m. today, this was our current national debt. That is $12,462,528,172,862. The cost per American citizen is $40,358. So if you are not employed, you're just an American citizen. That is what you owe to pay for that. Now, if you are employed, you are a taxpayer, so the cost of the taxpayer is $113,807. Now, I don't know about you guys, but part of that is to pay for things like subsidies for going to college. If I didn't have that, if I could keep that much money to myself, I could pay my own way to college. So that's very important. The GDP ratio, debt to GDP ratio, which is how much debt we have accrued to how much our GDP actually is. Our debt takes up 87.17% of our GDP. So we would have to convert, in order to pay this off within a year, we would have to convert 87.17% of our economy over into paying for that debt. So currently, the Fed is the largest holder of our debt at 49.37%. Foreign loans comprise 27.90%, with China being our biggest creditor, and they hold nearly $900 billion. So, in its entire existence, the Fed has never once been audited. It's been nearly 100 years now. They've never been audited. In fact, by the Federal Reserve Act that helped to give it leeway and to delegate the money printing authority, the Fed doesn't have to even disclose its dealings with Congress. So that's kind of a scary thought, because American money could be lent to companies and foreign governments without the knowledge of our own federal government. So that means more dollars could actually be out there than what the government even is aware of. But fortunately, there are two bills. There's H.R. 1207, and that was sponsored by Congressman Ron Paul. And that one currently has 313 co-sponsors in the House. And there's also Senate Bill 604, which is sponsored by Senator Jim DeMint. That one's got 30 co-sponsors, and these two bills, if they are passed, would open the Federal Reserve up to its very first audit. And I got some more cops over here. So the Federal Reserve note, this little piece of paper right here, is equal to this, literally. But here's the big problem with that, is when people realize that fact, this will have more value. The economic crisis that's been taking place lately has caused some of the nations around the world, particularly China and Russia, to call for Bretton Woods II and a new reserve currency. And on Friday, February 26th of 2010, Dominique Strauss-Kahn, the head of the IMF, proposed that it would be intellectually healthy to explore these kinds of ideas. So if that ever should happen, you could say goodbye to all of this. Remember, safety first. And this is what you might as well deal with right here. So I'm going to leave you with a few thoughts from Thomas Jefferson. And he said, "I believe that banking institutions are more dangerous to our liberties than standing armies. If the American people ever allow private banks to control the issue of their currency, the banks and corporations that will grow up around them will deprive the people of all property until their children wake up homeless on the continent their fathers conquered. The issuing power should be taken from the banks and restored to the people to whom it properly belongs." So that's the end of my presentation. I've got a few questions that help try to stimulate some conversation here. Should the Fed be allowed to continue? Should it be audited? Or should it just be outright abolished? And what would take its place if it is abolished? Should Congress be allowed to delegate the monetary authority to a private bank? What should the U.S. do regarding the failing dollar? And how about the rest of the world? What should this current administration do to fight inflation and to help truly turn the economy around? What sorts of national security concerns are present over our debt ownership? And what are the immediate and long-term consequences of both options of getting rid of the Fed or keeping it?
Cool, thank you so much, Nick. That deserves a round of applause. Tons of spots to jump into, but what would replace the Fed?
My opinion is to return it back to the Congress where it is supposed to be by constitutional law. But that's my opinion, and it as Article 1, Section 10 states, it must be at least, if it's going to be paper, it needs to at least have a gold or silver backing with it.
I think you're too far gone at this point. I agree with you in essence completely. But it's like the whole structure of the government is already so corrupted that what Congress? We're turning to what Congress at this point? It's not really a Congress, it's like the Roman Senate. They sit around and allow Julius Caesar all that. And I suppose